Good morning. This is the weekend update for Saturday, June 1st. Today we're going to start off a little bit different. The chart you're looking at right here is the TBT. It's one of those scam ProShares ETFs. And those of you who have been members for a long time know my opinion of ProShares and all these other double, triple garbage ETFs. But the reason I'm bringing it up is because this is what you're going to read about over the weekend and next week if the sell-off does continue, is what the reason for the sell-off is. And what the TBT is a mega short 20-year treasury. So essentially what has been happening is, you've been reading in the business media about the Fed possibly pulling back because we've gotten some better than anemic data regarding the economy, and the Fed comments in the last meeting that they're planning on at least coming up with a plan so that they can ease out of QE infinity. So over the last couple of weeks, despite the market rallying to new highs, you can see we'll flip over to the TLT. This is the 20-year Treasury bond fund, and just to give you a quick bit of background on how things work, bond prices go down, yields go up, and essentially what that means is bond prices go down, interest rates go up. So what we've seen happen, as you can see here on the chart, about a 10% or so sell-off over the last 3 weeks on increasing volume. And as a result, you've started to hear chatter on Thursday and Friday about, oh my God, interest rates, mortgage rates are now going to go above 4%. It's the end of the world. The market is going to implode. The housing market is done, etc., etc., etc. I find it kind of amusing, and the reason being, if you go back to the bubble days when the market was absolutely on fire, interest rates were 5.5% to 7%. A lot of people are still majorly underwater on their mortgages, and thanks to this big bounce back that I believe is only starting to begin in housing prices, you're now finally starting to get people who were underwater coming out of being underwater on their mortgages. And for some reason, the business media thinks that these people who are locked in at 5, 6, 7% mortgages aren't going to refi at 4, 4.5, and 5% mortgages, and that the refinance boom is done just because right now those with the excellent credit have already refinanced. They are, there's a large portion of mortgages out there still ready to refinance. But if we go back to that TBD chart, there's been a lot of chatter about this, especially over the last few days. But as you can see, we've got a potential triple top here right now, and stochastics breaking under 80. And if we look at a 3-year chart, here you can see this is essentially when, back in the summer of 2011, when the QE program started, we've essentially seen a 50% sell-off, and we've got a possible bottoming action here. I mean, the reversal in the bond market was going to happen. Is this it now? We've had monster volume over the last couple of days, and a lot of chatter, especially with what happened in Japan over the last few days. But as you know, the business media's job is not to report news. The business media's job is to sell advertising eyeballs. And the more you hype up and down, the more people who are going to pay attention. I was trolling around the websites or the internet this morning looking at the various conspiracy theories as to why we had that dramatic sell-off yesterday. I mean, if we look at let's look at the 15-minute chart. You recall over the last couple of days, or the last couple of videos, we've been talking about this expanding wedge that had developed on the Dow, a bearish development, and how we have been, the wedge gets wider and wider and wider, and eventually it 9 out of 10 times breaks to the downside. That breakdown happened in the last 30 minutes of the day. It was a dead day Friday. We had a fantastic week, so took an early week, long weekend, with about 90 minutes left to go, and market was down, 40 points, and then come back to see that we closed down minus 210. No coincidence that it was the end of the month, and already you're seeing the headlines out there about June swoon. Be careful about the June swoon. You recall that on the 1st of May, we had a 150-point sell-off on the Dow, and remember all the headlines we had there? The Fed is done. sell in May and go away, and you missed one of the best Mays we've seen in quite a while. So, be prepared for those silly headlines over the next few days. Looking at the Dow, I didn't really adjust the lines. You can see we broke that uptrend line that's been in place since mid-April, and the next support level right now is 14,874, which is the 50-day moving average. And if we got down to that spot next week, that would be a 700-point retrace, and that was something that was pretty common back in the '09 rally, which is this rally is very similar to. We've got RSI down at the 50 level, but check out MACD, extreme negative MACD level. So even if we do see a little bit of continuation on Monday and Tuesday, whenever we get to these extreme levels on MACD, we almost always see a snap-back move, as you can see on the chart. So not overly concerned. The business media, CNBC, will have you running for the hills. They probably are busy booking bearish people for Monday's show. That's just how they roll. If we look at the Dow Transports, actually pretty muted over the last couple of days. It did peak below that support line. 50-day moving average is at 6,200. Not overly concerned. The transportation index does not say run for the hills right now. We're actually getting down. We're under 20 on stochastics, and the last couple of times we've seen that level, we've seen a pretty big snapback move within, a couple of days from that level. Russell as well has held up pretty well. Now that may change on Monday as people read the business media and get herded like sheep as they usually do. And if we broke that, 20-day, we could see, 20, 30-point drop down to the 50-day moving average there as well. Now, what we need to keep in mind with regard to the Dow Transports is oil has been pretty weak. So, you got a lot of mixed signals out there. We have oil selling off over the last couple of days. It ran into resistance again at 98. Here we are down $6 a barrel. But on the other hand, they're saying, well, bond prices are rallying because the economy is getting better. But oil prices are kind of saying, nah, the economy still kind of sucks. We've got mixed data. Consumer spending actually came out on Friday and showed a drop. So it's back and forth, ho-hum, mixed data. One day we've got the Fed is done. Next day, the data kind of sucks. The Fed's not done. It's just the noise that's out there. We got to wade through the noise and trade our positions just with an eye on the nonsense that's out there. Now, this past week was absolutely fantastic. Excellent momentum all over the place. We had a monster winner Thursday. ETRM, this is a stock that we have been patiently playing really over the last couple of months, and especially over the last week. You recall last weekend's video, I went over how this chart was coiled, especially given the crazy runs we saw on CLSN and AFFY, and FDA news was expected at any time, and on Thursday, this stock broke out, and it broke out big, zoomed up, hit our target, plus some. Then dipped back on Friday, gave us a sweet entry. We were able to get in at 121 for some scalp entries on 126 to 127. Ended up bouncing almost 10% on that intraday scalp. Fantastic. If this dipped back below the 120 level without that FDA news coming out, sweet. Round 3, we get to play it again. Excellent momentum. Biotech stocks really heated up late in the week after the mania that we saw in the alternative energy stocks. I could go over all the winners we had this week, but we don't have enough time in the video. It was just an excellent week. And, a lot of action. Some biotech stocks we jumped into on Friday. ZLCS, ASCO, of course, has started. So we're probably going to start seeing a lot of press releases Monday and Tuesday from ASCO. And that's probably going to drive the focus. Let's see how the biotechs act. A big sell-off on Monday, though, might scare a little bit of the money away. So we need to keep an eye on that. But very, very nice momentum throughout these biotech stocks. TXCC. We jumped into this one on Wednesday when it broke through 50 cents, or Thursday, coiled, and then late yesterday ended up busting out to 57 cents late in the day. Nice little pop before that big market sell-off. Candles are kind of hard to decipher here right now, which is why I said in the chat room, book 2/3 of your gains on this one. Probably trail your stops to 48 to 49 cents on it now and see if it's able to continue higher over the next couple of days. HEB, we jumped into this one on the Tamiflu, but not a whole lot of follow-through on the bird flu SARS drugs. But, it still gave a nice 10% move, and each day it ends up getting, it goes from 21 to 23, so it's actually in a trading range right now. You add 21, you sell 23, or if you're in 22, you'll be able to get out flat. And, one thing I like to do, unless it's a focus swing play that we have, if these stocks don't move within a couple of days, the best thing to do is to jump out, then wait for them to trigger. A trigger point on HEB would be a break through 24 or 25, or you can just range these moves as you sit and wait. One of the stocks that we are swinging is HTM. Each day gets a nice pop up to 42, 43 cents, and then they take it down on lower volume. Insiders have started buying here now. That's typically a very good sign. Like many other stocks, it trades on the SCAMX index. So, if this was a NASDAQ stock, it'd be probably up at $1 this week. But low volume, profitable, cash flow positive, like sitting on it. Golden Cross on the daily. Just a nice sit and wait stock for when it comes out with some press release and blows the stock up. We had a couple of promotion stocks this week. YFRM didn't really do a whole lot, popped a little, but, on the positive note, these stocks are typically 1-2 day max plays, and it gave a flat exit. So you got in and out at the same price. I consider that, a win-win. Playing these roulette stocks, you're either going to get a dud or get one of these monster crazy runners. The other one we had was CWNM, actually popped 20%. Again, 2-day play, very nice volume, could continue. The chart actually still looks good. RSI is breaking 50, stochastics still look pretty good. You've got very nice unbalanced volume, but again, kind of in no man's land here right now. Worst case scenario, stop out flat. Best case scenario, 20-25% gain, and see how we go from there. But again, these are little testing waters on the OTC market, which actually may end up being very, very nice if we do see a pullback in the market over the next month. And that's, of course, going to be the chatter all weekend long. And if we get a continued sell-off on Monday. But, TBT, TLT, actually, if we go back to the TBT, that pro shares garbage that everyone likes to trade, triple, quadruple, whatever it is, triple top possible right there. I saw some chatter on some of the nut job sites this weekend that some extra Fed minutes got released, and in it the Fed was talking about how essentially, if you read it, they don't know how they're going to get out of QE. And as I've said, so anemic job growth and economic growth means the Fed's going to have to continue pumping liquidity in. The Europeans are starting to let the southern states pump liquidity in. Japan is pumping a crap load of liquidity in. So we are overdue for a pullback. I mean, we've known this for forever and a day, but the pullbacks haven't been really much of anything to talk about. After 2-3 days in length, that's a long time. We haven't touched the 50-day moving average since last month. We could touch the 50-day. Unless we see, a substantial 2-3 big day sell-off, then this is just more of the same old noise that we've become accustomed to of late. Quick mention on Apple. Apple, very close to a breakout here. Positive MACD cross on Friday. And the reason I bring up Apple is this might be one of those stocks. I mean, it has not participated at all in this rally over the last 6 months. It's the ugly redheaded stepchild. This could be a stock to watch for if we do see a sell-off in the overall market, that it gets used as a safety hiding spot for the fundies. So just keep that in mind. A very interesting play. If we get a breakthrough 463, this could make a legitimate run on 522 sometime in July. So definitely one to keep an eye on. We're pretty high cash right now. That's been the great thing about this market rally. And I say the great thing about it is there's not been a whole lot of email alerts. A lot of the action has been in the chat room. We've had some email alerts, but it's all been hot and heavy momentum trading. Today, tomorrow, it's alternative energy stocks. The next day, it's shippers. The next day, it's solars. The next day, it's biotech stocks. The good thing about that is you're in and out. You're churning your money. You're not sitting in a whole bunch of stocks. And if the market does indeed, decide to continue the sell-off here, then you're already sitting on pretty high cash, and you just wait for the next momentum sector to wake up. Now, looking at the 15-minute chart, one quick last note, deeply oversold. I mean, I was looking at those ticks going into the close on Friday. I think they said it dropped an additional 40 points in the last 20 seconds of the day. E-mini futures nonsense. So the robot's going crazy at the end of the month. Probably going to see some sort of reversal on Monday. Typically, when you see that late day nonsense, they bounce it back on the open the following day. So I wouldn't be overly concerned right now. We've had some fantastic setups, and I remind you that if you listen to the morons on TV and sold in May and went away, you missed a fat market rally. So when they tell you the June swoon, sell and go away in June, take it with a grain of salt. Have a great weekend, guys, and I will see you all in the chat room on Monday. Bye.